why are there on the COTS, the gold price goes up?
Okay, that's okay. We got a very highly sophisticated investor here who knows what's going on. This is part and parcel of the gold manipulation scenario. As investors are buying in hedge funds and speculator funds, and normal, ordinary people keep buying gold, price will explode unless some other institutions, these are central banks and so-called bullion banks, which usually take the short position by shorting in massive amounts, meaning selling gold that they don't have, shorting massive amounts of gold in order to keep the price from exploding. An exploding price will certainly tell a lot of people a lot of bad things. So the more they're buying, the more massive they're going to be selling in order to manipulate the price of gold. So very simple explanation here. The answer is that if you're going to be investing in gold or in general, you should familiarize yourself with the work of GATA, Gold Antitrust Action Committee, gata.org. And I hope this answers your question. So usually when demand is strong, they will short in order to keep the price suppressed. And when demand exhausts, they'll short a lot more to collapse the price and try to force margin calls and liquidations on weak longs. Is that?
Yeah, just looking at going back to the graphs, as gold went up to $900 in 75, and as it's $900 at the moment,
yes, it went up to $850 on January 1980.
In correlation to today's economic structure, cash flow, etc., would you say then gold is worth $1,800 on the long term?
Oh, no, currently gold is worth a little bit more than that, closer to about $3,000. If you use official CPI, US CPI numbers, the answer is about $2,000. Yeah. But you should never be fooled by government CPI numbers because they grossly understate the true inflation. So when they report 3%, the real number is like 5 or 6. Now they're reporting 4%, but the real number is closer to 8 or 9. So again, how do you measure inflation? Well, easy ways. I mean, how do I try to, teach my kids about it? Oh, well, I mean, not my own, the students that I teach. I say, well, tell me what was the price of bread. One loaf of bread back then, one loaf of bread later. That's a lot better indicator. Of course, gasoline is another one, but you have the oil crisis. But bread and other simple things, like stuff like a bicycle, all right, or a suit. So these things would tell you that inflation is way more than the official inflation. If you use official inflation numbers, they should be close to about 2,000. But if you're using unofficial numbers, some more realistic numbers, like John Williams's numbers from shadowstats.com or org or gov, I'm not sure. Shadow Stats, we pull it, Shadow Stats. It's going to give you a substantially higher, the true rate of inflation, roughly closer to 3,000 at the current time. So essentially all of these central banks and gold manipulation allows investors today to buy gold a whole lot cheaper than it would be a fair market price. More questions? Is this answer?
Yeah, no, actually I was just thinking that most of the people involved with gold and gold investments said it would stabilize at $700 around January, but it's actually shot up another $250.
No, none of the gold investors ever said that. These are usually mainstream media like the Wall Street Journal, Financial Times, and major Wall Street investment banks and so-called bullion banks, which are massively bombarding the public with a lot of propaganda, which is mostly incorrect. I mean, if you read the scholars in the field, nobody said 700 and then it's over. Now Wall Street again is coming back again and saying, oh, the gold bull market is over. It was a true gold bubble. The bubble burst and now gold is collapsing back to 100 or 200. The question is, when did ever Wall Street call a bubble before it burst? I mean, did they ever call the dot-com bubble? No. They even denied a year after it burst that it was a bubble. Well, what about the real estate bubble that burst like a year or 2 years? Well, even, just last year they began to admit that it was a bubble. When other highly competent people were calling in 2004 and in 2005 real estate bubble, what was Wall Street's reaction? No way, this is true, genuine, all the good stuff. The point is, never, ever in history, Wall Street has observed and, found that there is a bubble while it was occurring. They have always discovered that there was a bubble, usually a couple of years after it has burst and could never possibly recover. So anytime Wall Street calls, gold bubble or commodity bubble, you know there is a whole lot more to go from here on. When Wall Street does and says something, usually it is always the opposite. Why? Because Wall Street benefits, when people make the wrong investment decisions. Again, and some of these investment decisions are zero-sum games. It is Wall Street against the rest of the world. Wall Street makes money when ordinary people lose money, all right, and vice versa. So usually they do not have the incentive to find and tell the truth. And most of the time they're just incompetent, but it's a different story. Well, I don't want to insult any Wall Streeters in here. All right, let's see.
Could you talk about your analysis of what you would say is the future of fiat currency as a currency system?
That's a very big question. We're discussing some. Very risky. What is likely to be happening is the dollar will be unraveling. The dollar standard, which is now called officially Bretton Woods II, which is, Bretton Woods I collapsed in 71 and 73 after the so-called, Hamiltonian agreement. Smithsonian agreement is totally dead. Now what we've been going on for the last 30 years is called Bretton Woods II. Well, Bretton Woods II in the last, 2 or 3 or 4 years, everyone has realized that it is dead, completely dead. So everyone is asking, what is the future of fiat currencies? What's going to happen? Well, a number of things. It is not likely that all governments will be that dumb to follow the US government's hyperinflationary policy, to hyperinflate their own currency and to completely destroy them. Sooner or later, there will be a couple of governments that will come back and say, wait a minute, we are not benefiting from inflation. Usually it takes about 5 to 15 years for an ongoing inflation to inflict phenomenal amount of pain, to inflict enormous amount of uprising from the people, to put a pressure on the government to stop inflation. So usually after about 10 years of inflation, a phenomenal pressure in some countries will force a number of governments to adopt a sound monetary policy and a sound currency. And the only way known in history is one of two things. You adopt gold or you make your currency convertible. Very likely countries like Iran or China or possibly Russia will decide, okay, we just peg it to the gold and we call the death of the dollar. All right. I mean, you got to understand, these guys, this is politics. These guys hate the Americans. I mean, Chinese and Russian. They would love to see America, dead, deadly wounded. So they would do that when they are ready. And they are not yet ready. Or at least they find that, keeping the game going for another 2, 3, or 4 years will benefit them more than by, putting, sticking it to the Americans. So from that point of view, they just want to keep the game going. Also, they have phenomenal amount of reserves. They don't want the value of their reserves to collapse. So somehow everybody is playing the same game. We want to get out of our dollars before the others without actually collapsing the dollars, and then we're going to move on to sounder currency. Because the point is that they must necessarily incur the losses associated with their dollar reserves. I mean, all the oil exporting countries have huge dollars. What is it? China, India, huge dollars. Korea, huge dollars. Japan is the second largest holder of dollars in the world, just reached $1 trillion. China, $1.5 trillion. So they will be moving sooner or later, inevitably, to gold. I mean, they can't just all allow. Well, clearly there are benefits from having your currency to be the most stable in the world. And so far, the one and the only potential is that of China. Chinese currency is probably bound to be the next gold-backed currency, or at least the next world reserve currency. This will be a transition that will last roughly 20 years. In this respect, it's nice to study historically how the British pound, which was the world's reserve currency, was over time replaced by the dollar, all right, especially around World War I and right after that. I hope this is answering your question somewhat evasively, but I'm speculating on the future based on knowledge of some history and how things work and who would benefit what and who would lose what. Let's see, any more? Huh?
So if you can't beat them at war, crush them economically.
Oh, sorry, I didn't
I was
understand.
saying, if you can't beat them at war, crush them economically.
Oh yeah, and the Chinese are clearly the clear winners. There's no question about it.
Still back the ruble and the yuan. The ruble and the yuan.
Yes. And now Putin is doing.
When they get strong enough, they will devalue. When they get strong enough, they will devalue.
Yeah, well, the problem is China's got $1.5 trillion in reserves, and if they devalue the dollar, let's say by 50%, they immediately lose half of their dollar values. And it's a phenomenal loss. $750 billion loss, I mean, in current purchasing power, is phenomenal loss, right? So they just cannot afford to do that now. Or they don't want to do that. I mean, they have to bite the bullet, but they haven't had the courage to do so now. All right, let's see.
I have to cut the line here. It's 8 o'clock now.
All right, let's go party.
But we will have a break now, and I ensure that all the slides will be on our website. So if you missed some parts in the last few lines, you will have it in your home computers shortly.
Thank you. Well, at least one thing's for sure, you're more motivated than my own students. They get motivated mostly by grades.